re-appointing.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled Bernanke's Back and the Gold Bugs Rejoice. Okay, so in a bit of a political sleight of hand, the Obama team moved boldly and swiftly to deflect attention away from the unbelievably bad U.S. national debt forecast, all right, by appointing Helicopter Ben to another term. All right, now there's much debate over whether or not this is the best move, okay, and rest assured that there's going to be a lot of political grandstanding over this. All right, but that aside, what can we expect from a Bernanke-led Fed going forward? All right, we've already seen what Bernanke's done to get us out of the abyss, so to speak, and away from Great Depression 2.0. All right, but what's going to happen moving forward? Well, that depends on where you are and where you believe we are in the deflation versus inflation debate. All right, I personally have been in the deflation camp for some time now, all right, but I'm starting to come around to the inflationary side. Here's why.
As always, be sure to check out the written blog at www.mywealth.com/blog. Okay, now I wrote a while back that I thought oil was a better hedge than inflation just because of the utilitarian value of gold, meaning, people tend to use oil more than they would use gold. So, for example, the price of gasoline is affected by the price of oil. Almost everybody either drives to work or takes some sort of transportation or, heat your home, whatever the case may be. Oil is more important to the everyday person than gold is. If gold prices go up, you can choose not to buy it, and it wouldn't affect your life one way or the other. All right. This actually got people in the gold bug camp a little bit angry with me. It was actually kind of funny, some of the responses that I got for it. But I'm now firmly in their camp. Okay, I believe that gold prices will be going up now because of a lot of different reasons, but we're going to go through them and I'll explain them to you. All right, but we're talking about possible government intervention in the markets. All right, now there's no direct evidence that there's any sort of market tampering going on or anything like that, but people find it a little bit too convenient that, the market seems to be defying the fundamentals, all right? And all the news that we're hearing, had been really bad, and yet the market, particularly the equity markets, have been doing very well since March, since we bottomed out. So there's some talk out there that perhaps it's a little bit of a government, I don't want to say conspiracy, but maybe a little bit of groupthink going on there, where the government is, sort of encouraging people to take certain actions to, keep the economy stable. All right, so it looks like there's going to be a more continued yet more gradual decline in housing prices. All right, housing prices seem to have stabilized, and it looks like home sales are going up a little bit, little by little. Banks are starting to lend a little bit more. All right, and that's one of the main directives of the government and the Fed was to try and halt the deflation that was going on. Now the deflation was primarily with home prices, and that was something that affected a lot of people because a ton of people bought homes. So as prices were going down, people were losing wealth and losing value, so they needed to stabilize that. And the way that they figured that they would counteract that, is by keeping interest rates very low to try and get a little bit of inflation going to sort of stabilize that. So if something's falling and you're trying to pull it back up, hopefully that's going to stabilize it. And that's what's been happening with housing prices. All right, but what that means is that you're going to see inflation. All right, now inflation just means higher cost of goods, and that's for just about everything out there. So when you go to the gas pump, you're going to see higher gas prices, maybe milk costs more, something like that, and that's going to help stabilize the government. So, why are they trying to do that? Well, inflation is a tax that affects everyone. All right, so when you hear the president say, "Oh, we're not going to raise taxes on people below X amount of dollars that they make," I believe the number is $250,000 right now. I actually believe that. All right, but what they're going to do is they're going to try and get a little inflation going, to help work our way out of this debt. Okay, now this is an insidious tax because it affects everybody. All right, obviously it affects people who don't make as much money as those that do because they have less dollars that they can spend, and higher prices affect them more. Okay, so that's going to be sort of the equalizer that affects everybody, and they can still sit back and say, well, hey, we didn't raise taxes on you, we said we didn't, so that's good, but meanwhile, you're paying more for everything else that's out there. All right, but we actually think that because of the way that the markets are working right now, that because of the way that there seems to be this outside force, so to speak, working within the markets, we tend to think that perhaps the government's going to really kind of get in there and take a little bit of control of the market. So we think that the price of gold is going to be somewhere that's going to go up, because that's going to be something that the government can live with, and I'll explain that in a moment to you. All right, so the price of gold does not affect average Americans. The price of oil does. Okay, so when you have, when it becomes clear that we're in an inflationary environment, all right, people are going to run to commodities and gold to hedge against that inflation. Okay, but what happens if the government says, hey, we don't want the price of oil going up because, everyone's going to be mad at us that, gasoline prices are higher, and then they're going to complain about that, and guess what? They're not going to vote us into office next time. So maybe we're going to take some action to keep the price of oil low, like perhaps, selling out of the Strategic Petroleum Reserve, the SPR. Now, I don't know that they're going to do that, but if they do, that could be something that would keep the price of oil at bay, which, quite frankly, that's a good thing for average citizens, unless, of course, something major happens and we need that Strategic Petroleum Reserve. But, I think that's going to be a chance they're willing to take. Okay, so once everybody realizes that, hey, oil's not going to go up past this price, and because the government's going to be selling out of the SPR, all right, they have to do something with their money. So the money's going to flow to gold, and when the money goes to gold, the government's going to say, you know what, we can live with that. That's okay, because again, the price of gold doesn't affect average Americans, all right, but the price of oil does. All right, so bring back Bernanke. So Obama says, let's bring back Bernanke. He's been doing a good job so far, but he's going to be the unwitting fall guy in all this, because he has to keep certain inflation in check. Now, when we say certain inflation, we're talking about the price of oil. That's the big thing that people see when they think about inflation. I mean, you drive down the street and you just see the price going up and up on these signs, and that's a very easy way for people to see that. So if they can keep the price of oil in check, then you know what, you might not notice that you're paying a dime more for milk, or you're paying 20 cents more for bread, or whatever the case may be. So Bernanke was brought back for that reason alone. And if he continues along the path that he's been going, he did bail us out of take us back from the edge of the cliff, so to speak. And if he continues in that vein, then the administration's going to be pretty happy with him. And if this whole thing fails, you know what? They're going to turn around and say, oh, this guy's policies, we thought he changed, but I guess he didn't. So it's going to be interesting to see how this plays out. But either way, we think gold's going to be the place to be going forward. All right, so don't wait. Get in a course, get educated. Come to www.mywealth.com. Learn about how government decisions can affect your investments.
Therefore, it's going to be the market versus the Fed. All right, and everybody knows that as a market participant, you never want to try and fight the Fed. All right, once the powers that be, the big players, Goldman Sachs et al., once they're on board, and everybody except for the little guy who usually gets harmed in these instances, and once everybody knows that going long oil and buying it is not in play, all right, money's going to flow to gold, okay, because it has to go somewhere, okay. And if you're going to try and fight inflation, while oil had been a great place to put it, it's not going to work as well this time. All right, so if the price of gold happens to go up, all right, that's something that the administration can live with, and it's also something that the average citizen can live with as well. As you know what, you just don't buy gold. It's not like you gotta drive to work with gold in your tank. So that's why we think that gold is going to be the place to be going forward. All right, so if this does happen, you're going to see the gold bugs. They're going to be awful happy in that you could see great appreciation in price of gold, possibly back over 1,000, and with some room to run. So to learn more about how government decisions can affect your investments, be sure to check out our courses, particularly the investing, currency, and ETF courses. So I'm Mike Conlon. Thanks for being with me, and I hope to see you in those courses.